News of the war, which people thought, oh, you buy that. No, you don't. You don't buy war news in the monetary metals. Suckers come in and buy it, in which case they're vulnerable to get kicked in the shin. And sure enough, they did. If you bought in the rally early this week, it was up to 96, I think. They bagged them. Now we're trading 83, 84. Gold went back to its high effectively. Now, that's not the way gold behaves if it's topping. But if you take that ratio between the lows of that 50-year range and the high, that's a tenfold range. That would project silver like 250 to 500 just to get even with its real dollar value. But you don't go up and make double tops. That's not the way the monetary metals have ever peaked or bottomed. They go through it. It's setting up a triple top breakout. Now, silver's the laggard. We suspect by the end of this month, you'll see much more evidence of that. By next month, probably new highs. If you push gold back up above that 5,300 again on a close, it won't stop this time. Silver will ramp. JP Morgan and Morgan Stanley projected gold reaching 9,200 or something.
I want to ask you about that, precious metals, both gold and silver. Last time we had you on, it was right before silver crashed significantly from about 120 to below 70 in a matter of days. Now things seem to have stabilized, and you've talked about how the correction is over. Can you expand on this?
Yeah. The silver drop, we expected one. We frankly didn't expect it to occur in late January. We thought maybe it'd be late February or March. We had a major, what you call a green light go on that informed us through our studies that when the spread of silver breaks out versus gold, meaning when you plot the relative performance of silver on a chart relative to an ounce of gold, divide silver into gold, express it as a percent, there was a technical level to break through that would indicate, oh, silver's breaking out. Silver's going to launch versus gold. That was the November close. Okay, that occurred. When this has occurred before, over the past 50 years, what's happened in the following couple of quarters is an explosion in the net price of silver. While gold still goes up, silver goes up a lot more. And it usually gets its job done in a couple of quarters. Well, start from November, meaning December's month one, okay, then month two. So we kind of thought maybe you get into month three or so, there's usually a midpoint stumble. This one was sharper than we had expected, but it doesn't do any damage to our long-term momentum trends of gold or silver.
When silver collapses that fast, the timing matters more than the drop itself. As Michael Oliver points out here, the key signal wasn't the crash from 120 to under 70. It was the silver to gold ratio breakout back in November. Historically, when that ratio breaks, silver tends to outperform gold dramatically over the following 2 quarters, and that pattern has repeated several times over the past 50 years. What many investors miss is that early corrections inside momentum breakouts often appear violent but rarely break the trend. Next, Michael Oliver discusses why that sudden January shock may actually strengthen the larger silver breakout.
Whatsoever. Yes, you did some short-term damage. And in fact, you said a couple days, you were right. That break was actually 1 day and a half. One day, the last day of January and into the first trading day of February, and then you made your low. Since then, silver has gelled, and we're now 20 bucks off that low or so, or 18 or so off that low. And we're still well below the high. But gold, interestingly, though silver's still been outperforming gold even since November, went back up and had a close last week, I think it was, at 53.11 on the front month contract, which would be the April future right now. If you go back and look to January, not the high trade, admittedly that got up to 5,600, but the high close on a daily basis was 53.40. So effectively, we came back up to it, to the high on a closing basis daily, and basically matched it in gold. And then with that news of the war, which people thought, oh, you buy that. No, you don't. You don't buy war news in the monetary metals. Suckers come in and buy it, in which case they're vulnerable to get kicked in the shin. And sure enough, they did. If you bought gold in the rally early this week, it was up to 96, I think. They bagged them. Okay. Now we're trading 83, 84. Okay. But gold went back to its high effectively.
Markets often punish the crowd exactly when headlines feel most convincing. As Michael Oliver points out here, the entire silver crash actually lasted barely a day and a half, something most media coverage never emphasized. That matters because fast collapses inside strong trends often represent liquidity events, not structural breakdowns. Meanwhile, gold quietly climbed back near its prior closing highs around 5,300 even after geopolitical headlines faded, exposing how many traders simply chase narratives like buy gold during war. The real signal is resilience after panic selling, not the panic itself. Next, Michael Oliver talks about why gold revisiting its highs may signal something far stronger than a temporary rally.
Now, that's not the way gold behaves if it's topping. Whenever gold has made a major top or major bear low, 2011 high, 2015 low, it's isolated. You don't come back to that low or come back to that high. You may try to, but you never do. Gold went back up and basically matched on the daily close, the peak close of January. And then when you look at the miners, heck, they went back to their highs and even marginally nipped them out. That is, again, a sign that the air is not so thin up here that it's a top. In other words, you get up there and you fail, and then that's it. This time we go all the way back up to the highs again in the miners. Yeah, they pull back since, but you don't go up and make double tops. That's not the way the monetary metals have ever peaked or bottomed, with double tops. They go through it. It's setting up a triple top breakout. Now, silver's the laggard right now, but you got to look at the mama metal and the miners, and they're saying, hey, this is not as weak looking as you think it is. Anyway, that's our view right now, is that the metals are basing. We suspect by the end of this month, you'll see much more evidence of that. And by next month, probably new highs.
Michael Oliver says silver could outperform gold after a major breakout in the silver to gold ratio that started in late 2023. He believes silver may rise toward $250 to $500 in the coming years and expects new highs soon as momentum continues building.